All right. So I haven't been posting. I mean, I've been busy with a lot of things, but today we have lesson 1.3, why trading futures for day trading. We're going to go over benefits of day trading futures and differences between futures and other markets. So, benefits of trading futures. You have high leverage, so you can, I mean, it's pretty easy to understand leverage. Futures trading allows you to control large portions with a small margin deposit. So the only bad thing about that is you can lose more money faster or make money faster basically. And then this basically enhances profit potential but also increase, yeah, basically what I was saying. And then number two is no pattern, no pattern day trader rule. Unlike stocks, futures are not subject to PDT rule, which requires traders to maintain 25,000 balance for frequent trading. So in futures, you could have as little as 250 bucks in your account, and you just have higher leverage, which is like margin level and all that, and you can make more with that 250 or lose it, you know. You can trade futures with lower capital, so 250, like you could just put 250 bucks in. Almost 24-hour trading. That's not 24/7, it's 24/5, so you trade on the weekdays and you have the weekends off. But you have news that comes out every weekday, which you can look on Forex Factory and look on like the red can or the red like folders, orange folders or yellow folders. Red, it's going to be a high impact news day. Orange is like somewhat high impact, and then yellow you don't really have to worry about. You'll see a little market change, but nothing crazy. And then high liquidity and tight spreads. Major future contracts. It's just the S&P 500, which is ES. Crude oil, which I think it's just oil or something. Gold, I don't trade, but what I trade is ES and Nasdaq, which is NQ. Those have deep liquidity with them. Tight bid ask spreads help ensure efficient trades. Execution with minimal slippage. Sorry if I sound sick. Like I've been all like stuffed up, but number five, lower trading costs. Yep. Um, Futures trading especially has lower commissions compared to stock trading. So you have no SEC fees, and spreads are generally narrower than other markets. Direct market access, DMA. Futures trading provides direct access to exchanges, reducing order execution delays and eliminates resilient, or I don't know, I'm tired, sorry, reliance on brokers for market making like in other stock trading platforms. And you have no short selling restrictions. You can go long or short with the same ease. I traded. I haven't tried futures, but or not futures. Options, but I have done forex. I really didn't like it. It was just not fun. So you have no uptick rule, borrow fees, or restrictions with like in stock trading. So you don't have to worry about that in futures. And then standardized contracts. Future contracts are standardized, making them easier to trade and analyze. So you can look in the market, go based off the market. Um, Unlike stocks or options with variety. Yeah, I mean, you really, it's just like the basics. Like, if you guys just want me to get straight into like how the market moves, I could definitely get into it. But I feel like you guys should just have market knowledge and see what's going on with the market. And then tax advantages, it's a 60/40 rule, so it's a lot nicer to have that. And then volatility profile, um, profit opportunities. You have futures market often exhibit significant intraday price movements. So if we go to the market right now and we go to the daily, so so today it's going to close in 7 minutes, but we were at 58.36 to all the way down to 57.42. And I mean, that's almost 100 ticks in just one day, so you can definitely catch trades in that. So it's a lot nicer. And then is benefit, yeah, so you can just, it's short term, not like short, but like day wise, like you're gonna hold for a day, or not like an hour max or whatever. So, and then for the differences between other markets, you have futures versus stocks. So ownership, you don't need to own any like asset for futures, but buying stocks, meaning you have a share of that company. Leverage, you have high leverage with margins, and with stocks you have limited. And then trading hours, nearly 24/5, and then stocks standard market is just 9:30 to 4 p.m. And then regulations, no pattern, like I was talking about earlier. But with stocks, you have to have a minimum of 25K. For short selling, you can short any time you want. And then um, for stocks, short requires borrowing shares, so you have to borrow those shares to short, basically. And then tax benefits is the 40/60 rule. It's just lower. And then stocks short term gains taxed on higher rates. So self-explanatory. Market variety includes index, commodities, bonds, and currencies. And then for stocks, mostly company stocks and ETFs. ETFs are good. I mean, I will start investing in the ETFs because it's just long term. And then for the futures and options is going to be, I really don't know options because I haven't really like looked into them, but we'll zoom in a little bit on this. So futures and options, contract type, obligation to sell / buy, expiration, you know, or no, these are switched. You're obligated, like you have a time limit, but with this, these two should be flipped right here. My bad. But you don't have to sell at a certain point or it expires like in futures, but in options you do. Leverage, you have higher leverage due to margin. Same thing with options, but for stocks it's just limited with options premium. Time delay, you have no time, or decay, my bad. You can hold as long as you want. Options, you lose value over time. Liquidity, there's a lot of liquidity in futures, and options, you have low liquidity. Profit potential, no limit. You can make as much money as you want, but you can also lose as much money, you know. Options, I mean, limited to the premium paid if buying options. I really don't know a ton about options, but I think it's like once you buy, you have a certain drawdown limit. I don't know. I'd have to research, but you guys can do your own research. But for futures and forex, which I know about is market structure, you have centralized, so CME, ICE, and then decentralized is banks and brokers, etc. Trading hours nearly 24/5, and then for forex it's 24/5 but global market. And leverage it's high, and forex it's extremely high with a 50 to 1 or more. It's just you need a lot of stuff, a lot of money to trade forex basically. Well, you don't need a lot, but it's just like I don't recommend forex. But contracts, it's standardized. One lot is a fixed size, and you have no standardized contracts for forex. Regulation, high regulation by exchanges, and in forex it's less in some regions, so depending on where you are. And then futures and bonds. I don't know a lot about bonds, but so purpose is just hedging, and bonds, fixed income investments. Leverage high for or futures, and then bonds no leverage unless using margin. Risk profile high risk. I mean, due to price volatility. I mean, we dropped 100 points, or you can drop or increase 100 points in a day. But lower risk for bonds, but sensitive to interest rates. Ownership, no ownership, just a contract, and then owns an actual like fixed payment on bonds. So key takeaways for futures and stocks is futures are leveraged, don't require ownership, and allow easier short selling. And I definitely like I was talking about this earlier with the other videos is this is like your summary. So just write this stuff down just to look back on. And then futures and options. Futures have no time decay and must be settled. And then whereas options can expire worthless. So they can expire when that set date happens or it comes. Futures and forex. Futures trade on regulated exchanges while forex is decentralized. And then futures versus bonds. Futures are for hedges while bonds are investments. So that's basically it. We have nothing else to cover, but I'm gonna try to post at least 2 times a week. But if I have a lot of time on my hands, I'm gonna just push out as many videos as I can. But yep, I'll see y'all next time.